What's up, world? Have you ever wanted to invest in the stock market, but you weren't even really sure where to start? In this episode, I'll explain what a stock is with an example, and stick around till the end when I show you how to buy some. Welcome back to Riding the Bull, a series where my girlfriend and I are trying to put away $75,000 into savings and investments over the next 12 months. Anna is aiming to save $23,000, which means I need to put away this much each week for 52 weeks. Where am I going to put it all? Not under my mattress, but into my dividend growth portfolio on Wealthsimple Trade. The goal of this portfolio is not to invest in the hot tech stocks that are going to double up in value overnight. Instead, it's to invest in companies that have a history of paying a growing dividend so that I can create a stream of passive income for myself. So far, you've seen me invest in ETFs, and this week I'll be buying my first individual stocks. But for those of you who are new to investing, you might be thinking, what are those? So let's take a second to look at a stock that we all likely know. Target. Right now, Target is selling at $114 per share. And because Target has over 500 million shares, my $114 gets me a tiny piece of ownership in Target, less than 0.2%. A stock is essentially a small piece of ownership in a company, which is offered to the public so that that company can raise more funds to fund their business operations and hopefully grow. Basically, these companies are selling ownership so that they can hire on new people or build new buildings or invest more money into research and product development. But if we look at Target's chart for a second, we see an important fact of the market. This price rarely stands still. So if we had to purchase just one share of Target this time last year when it was trading for $72, we would have made $42 for a return of 58%. Now, $42 might not get you excited, but if we were to buy 100 or even 1,000 shares, we'd now have $4,200 or $42,000. However, if you were to buy this time last month, when the share was $128, you now would have lost $14 per share. Which again is why you should only trade with money that you're comfortable with watching ride the ups and downs of the stock market. Okay, now we get shares, but why do I keep talking about dividends? Well, a dividend is a portion of a company's profits or reserves which are paid back to its shareholders. Kind of like a thank you for ownership. What I like about investing in companies that have a history of paying a growing dividend is that they're less likely to cut their dividend in the event that their stock price declines. To see the dividend history of US stocks, I like to use Seeking Alpha because it very clearly shows the dividend history for US companies. For Target, we can see that they've paid a growing dividend for the last 51 years and have a current yield of 2.31%. Although this isn't a guarantee that they'll continue to pay me this 2.31%, dividends have proven to be less volatile than the market value of stocks. Now that we understand the fundamentals of stocks, let's go ahead and buy some. For our first stock this week, let's go ahead and buy a share of Target. Within my Wealthsimple app, I can simply type in the company name or its ticker symbol, which is that little symbol that you'd see at the bottom of your TV, and then specify how many shares I'd like to buy. Now the value of my investment is tied to the stock price of Target and the ups and downs that it has in the future. But eventually, they'll pay me a thank you for this ownership in the form of a dividend. Another stock that I'll be purchasing today is CN or CIBC. This bank stock has a current yield of 5.29% and it's grown consecutively for the past 9 years. And the final company that I'll be purchasing is Fortis. This utility company has a current yield of 3.28% and it's grown consistently for the past 19 years. Now that we've made our purchases, it's time to deposit another $1,000 into our account. While we wait for that transfer to complete, go ahead and let me know some of the questions that you have on money management or just the stock market in general, and I'll be sure to answer those in the comments and in my future videos. I was hoping to get to ETFs this week, but we'll take some time to cover them next week, as well as doing a January budget review. So get out there, start doing your research, and of course, let's start making some money.